Hi there, my name is Tatenda and welcome to the Triple T Traders platform. Today we're going to be looking at the different types of assets there are, why they're so popular, and what is the easiest way for a beginner to start earning money. Let's get to it. Any novice trader should know and decide which type of assets that suits them best. Different assets require different approaches, strategies, and the amount of time you need to spend on them. Some people need predictability and are satisfied with small but stable profits. Others prefer investing large amounts of funds in large volatility assets. That's like earning a lot, but at the same time risking a lot. And besides, you probably won't find any type of trader that's very good at both. Today, there are 6 different types of assets in the traditional methods of trading. These are currencies, cryptocurrencies, stocks, commodities, futures and options, CFDs, or other known as contracts for differences. Now, let's take a look at each and every one of them in details. The most popular types of assets are currencies. They are traded on the International Forex Exchange, where we can trade only official national currencies. The idea is to predict the behavior of one currency in relation to the other. Will it go up or will it go down? So the asset itself is a pair of currencies. For example, Euro USD, USD Yuan, Euro Peso, and so on. For example, I like the Canadian dollar Japanese yen pair. For me, it brings me a lot of fortune. And as a young trader, when I started out, it was the only pair that I was able to analyze thoroughly, and it brought me a lot of fortune. There was a month when I had $2,000 profit and $1,800 came from this very pair. So it was those times when I believed myself to be a trader. So the main advantage of Forex is that it's open round the clock and the liquidity pool is quite high. And also the price changes very fast. That means you can earn fast and you can lose your money very fast. The second types of assets are cryptocurrencies, also known as digital money. The first one recently appeared in 2009, and today we already have 1,500 types of cryptocurrencies. The most popular one and most loved ones being Ether, BNB, and Avalanche. Bitcoin is still the most popular and the most loved, and it was the first one of its kind. Cryptocurrencies are extremely unstable because they do not depend on governments or banks. This gives us a very good opportunity to make huge profits. But I would strongly recommend to all beginners that only trade in cryptocurrencies if you are very sure about it or if you have nerves of steel. As for the advantages of cryptocurrency, I can point out the fact that they work 24/7. That's very good. And also they have the highest level of protection. Yep, digital money cannot be forged as all data is encrypted and all transactions are stored on a list of ledgers and recordings called the blockchain. So now I want to take some time to answer a few questions that you guys have sent to me. The first question being, how much do traders earn? Well, a lot. Of course it's a lot, but all in all it depends on your initial investment, the behavior of the market, and the risk that you're willing to take. Most investors earn up to 150 to 200% per annum, but some daredevils even earn 1,000% per month. But of course it all depends on the risk. And then the second question right here is it really safe? Like, is trading really safe? I'll tell you this. The truth of the matter is that there's always a risk in everything that you do. If you don't want to take the risk, it's better you get your money and deposit it in a bank, and then, well, there you might earn some money, just a little bit. But yeah, it all depends on the reputation of the bank and the situation in the country, right? So the third types of assets are stocks, or other known as shares. So a share is a certificate that gives you the right to own a certain percentage of a company. For example, you can even own British Petroleum, you can own Amazon, and you can even own Apple. All it takes is you buying a certain percentage, and of course, usually these shares are very small. In the case of shares, there are 2 ways of earning profits. Either you can earn dividends that the company pays to its investors, or you can just simply sell your shares when the prices go up. It can either be now, in the next 10 minutes, or who knows, in the next couple of years. It's all up to you. Shares are popular not just with traders, but also with investors. This is because these are the most predictable, the most reliable, and the most stable assets. Why? This is simply because they can grow or reduce depending on the global economic situation, or it can also depend on the actions taken by this very company. For example, after a successful annual report, shares of companies usually increase. This asset also has its own disadvantages. The main disadvantage is the fact that different stocks are traded in different locations. For example, New York, London and Beijing. And of course, the different time zones affect trading time. And of course, on weekends and public holidays, the stocks are closed. The next types of assets are commodities. These are the oldest, and to these, the classical rules of marketing apply: supply and demand. The higher the supply, you know how it goes. And so there are four main types of commodities, and these are agriculture. This includes palm oil, grain, and so on and so forth. The next ones are metals, which includes gold, silver, copper, etc. And then there is the energy, which includes oil, crude oil, gas, and so on and so forth. And the last one is animal products. The principle of trading these commodities is actually quite simple. You just have to understand the demand and supply of these commodities and assets in the future. For example, when you know that something will be costly in the future, you buy it and keep it. And then when the prices go up, you sell it off. It's just that easy. Most traders actually use them to just diversify their portfolio, to just split the profits even. Next ones are options and futures. Well, these ones are really different. These are the so-called financial derivatives. Here you don't trade currencies, commodities, or anything like that. In this situation, you are trading the right to sell or buy something at a fixed price in the future. It actually sounds quite complicated, but believe me, it's actually very simple. So imagine you go into a store and you meet the shopkeeper and you agree on something. Let's say you want to buy a kilo of bananas, and then you agree to say, okay, I'm going to buy this kilo of bananas at $3 in a week time. Now, you're not looking at the price then, you're looking at the price in a week time, okay? So a week later, this transaction is considered complete. And in a week time, that means you're just going to collect your bananas and pay that $3, regardless of the price that will be there a week later. By using futures, the seller is able to predict and know that in the future he's going to sell these bananas or these fruits in a certain price, okay? And the buyer knows that in the future he's going to be receiving his fruits or whatever he needs at that particular given time. So the difference between options and future contracts is the expiration date. On the expiration date, the buyer has the right to refuse the transactions. However, during the transactions in the beginning, the buyer has to pay premium, which is not refundable. And finally, the last types of assets we're going to look at are the CFDs. In other words, a financial instrument that allows you to speculate on price differences. In trading CFDs, you don't need to own a company or commodities or stocks or something like that. All you need is to be able to predict the price change. Will it go up or will it go down? The greatest advantage is the ability to trade with leverage. That means you can even borrow money from your broker and make transactions in large amounts, but also you have greater losses. In addition to the traditional forms and methods of trading, there are also binary options. Now, binary options are different in the sense that in this situation, you just need to predict whether the price goes up or the price goes down for a certain asset, and it doesn't matter the value of the asset, or you still get a profit, okay? So they're kind of similar, but in a much simplified form. So the transaction in binary options can last for 1 minute, 1 second, who knows, even for several months. Or the transaction keeps going, you predict whether it goes up or down. But binary options have earned a very, very bad reputation because of certain brokers, okay? So you just need to find the right broker. Some brokers would end up not letting you be able to withdraw your money. So you just have to find a trustworthy broker. The greatest and most significant advantage of binary options is the ability to start trading, to start earning with just a minimum amount. You can even start with $1 and be able to double it within a short period of time. Yes, you get that right. It's unlike other assets where you only earn the difference in their profits. For example, when you buy stocks with $500 and the next month you decide to sell them at $510, it means that your profit is only $10, which is like 2% of the initial investment. In summary, there are 6 different types of assets, plus binary options being separately. All these assets have got different predictabilities and volatility. For a beginner, I would highly recommend you to start with stock and forex because these are not so complicated, very easy to understand and less chaotic. And if you want to try some micro investments, you can always go for binary options, but be sure to find a very trustworthy broker. As for the most experienced traders, of course, CFDs and cryptocurrency because they understand these assets very well. So be sure to please leave a comment if this information was useful to you, and please ask us questions. I'm really waiting for questions that I will answer in the next video. And be sure to subscribe. This has been Tatenda. See you next time.